Hey, everybody, welcome back to another episode. I'm your host, Brandon Cobb, and today I've got Cory Jacobson on the show. He is the owner of the Wealth Juice podcast and the Wealth Juice Inner Circle Elite program, where they specialize in helping first-time investors get their first property. He's got a really cool story. He's got over 88 units in his portfolio. Quit his W-2 job because his real estate was spitting off the income that he needed. And we're going to talk more about his story today and some really cool stuff. You're not going to want to miss this. Cory, welcome to the show.
Brandon, I appreciate you having me, man. This is going to be fun. Thanks for taking the time, and I'm excited to go wherever you want this convo to go.
Yeah, this is so for those that don't know who you are, what's your story?
Okay, I'll try to keep this brief. I'm in Philadelphia, and when I was 26 years old, I was actually working for the Philadelphia 76ers. So I was running their youth camps, and I've been a basketball guy like my whole life, and I was getting paid like a whopping $35,000 a year to do this. It turns out they pay the players a lot more than the rest of the people at the organization, but that's
Yeah.
for good measure. They're bringing in the money, right? So I was 26. I was like, I wanted to stay in this realm, but I realized that for me to like try to climb this ladder, it was going to be tough. My boss wanted me to stay. He's like, Corey, I can get you to 45 grand, and like that's not going to move the needle for me. But he said, you know what you should do? You should buy a 5 bedroom house and you should live in one of the bedrooms and rent out the other bedrooms to the people that work here that were all like similarly my age or a little bit younger. I didn't exactly take his advice, but I bought a 3 bed, 2 bath. I lived in one of the bedrooms, rented out the other 2 bedrooms, and I was able to live for free because I had a little bit of money saved up. And I went from paying $1,000 a month in rent to living for free. And that was when my brain like flipped the switch. And I was like, oh man, this real estate thing, this is pretty interesting. So I left that job and I got into sales because I was like, you know what? I need to keep my income the same, but I need to make more money so that I can go buy more real estate. So I was able to, I moved into a sales position. I was able to make a little bit more money and I started buying small duplexes and triplexes and single family in my Philadelphia and New Jersey market. Just doing this something simple, saving up money, deployed in a deal, saving up money, deployed in a deal. I was always running out of my own money. I got to like
Mhm.
6 to 7 units. I partnered with my partner Ryan. We started buying more together. We started our social media and our podcast just to document our journey. I was thinking, man, if people listen to Bigger Pockets, where somebody bought, they have 1,000 units and they started in 1990, like maybe they would want to follow along in our journey. And we're just sharing all the good, the bad, the ugly, all the mistakes we made. We'd have property burned down. We've had, evictions, all the stuff. And we just shared it, organically. So once we started to meet people through our podcast, that's when our portfolio started to grow. I decided to not keep buying the small onesies and twosies. I said, you know what? I can own a smaller percentage of larger deals because I built a platform and we could raise capital. We could do underwriting. We could do marketing and investor relations for larger deals. So that was when our portfolio grew from like that 10 unit range to just in the, 90-ish units,
Mhm.
where we started buying small to mid-size multifamily, like the 5 to 30 unit value add in actually New Hampshire and Vermont, because that's where our partner is up there. So that's kind of the long and short of the last 6 or 7 years and our growth. And I can really, it's a testament to just starting and figuring it out and making all the mistakes, but building in public. Those are the words I like to use because I'm just like, I just wanted to tell people what was going on and people, hopefully, people would resonate with our story and they did a little bit. So that's the journey.
Very cool. How did you go about finding your first few investment properties? Because the single family rental market and duplexes and triplexes, it's very competitive. There's a lot of people out there doing it. The barrier to entry is pretty low. So, it's a mom and pop world, right? It's a main street world. Um, how did you go about competing and finding those properties? Because you were also using your own money. I'm assuming, make a down payment, get a bank loan, something like that. I'm assuming, correct me if I'm wrong here.
Yeah, that was exactly how we did it. And honestly, I started in 2018. So the majority of my single family buying, it was kind of one of those things where it was like it took me 18 months to save up for my first property. Then it took me 9 months to save up to my second. Then it was 6 months. Then it was 3 months. And I started to be able to churn it a little bit. But the way that we found these properties were our first few were on the MLS. I bought a $125,000 duplex in South Jersey in a C plus market. And I did everything wrong. I inherited tenants. I had no clue what I was doing. And that purchase price, I realized, okay, well, how much can this property actually appreciate? And then we benefited from COVID, and that's kind of what happened in 2020. We bought this property for 125 grand, and I sold it in 2023, and I made 100 grand profit. And I thought, all I did was fix stuff up along the way. Like I didn't go in with a rehab plan. I didn't even know you had to fix properties up back then. So I just, but once that happened and I realized, wow, 100 grand in 3 years, that's $33,000 a year. I couldn't save that up at my job. Like it was really tough for me to save that up at my job. And I realized
Yeah.
I didn't actually work for the money. My property worked for the money. So once that happened, I was like, okay, I need to play real life Monopoly. I need to go find these deals and then take the $125,000 duplex that I sold for 230 and go buy a $500,000 asset and then take that money and try to go buy $1 million asset because I knew the appreciation was the real game as opposed to the cash flow. But to answer your question a little bit more, like strictly, these properties were on the market, and then there were a couple off market deals we bought in a state sale from
They were on MLS. You were MLS shopping.
I was MLS shopping for the first 3 to 4, and then like deals 4 and 5, we bought an estate sale from a a family that passed their home down to their son. He wanted nothing to do with it, and we went in and we rehabbed it, and that was when I was like, okay, now I really get the game of not just waiting for the natural appreciation to happen, but really forcing it to happen. We did what's called a home style loan, where we wrapped the renovations into the mortgage. And then it was kind of like an elongated flip, if you will, because we held it for 4 years and we turned like 40 grand into 200 grand. We like 4x our
Mhm.
money. And I was like, all right, I'm addicted. Like, let me see if I can go do this over and over again. And yeah, it's more competitive now, but there are still deals out there, even on the MLS. You just kind of have to know what market to look at, how to build a team, and how to go about it.
And what team is involved in that?
Well, I would say if you have an investor friendly agent, I feel like that's the biggest one, but it depends if you're going on market or off market. Having a great lender, having a great property manager, having a great contractor, all these people, having great title, having great attorneys, people that you can go to, especially if you're investing out of state. So those are the people that you kind of put together, piece on your team, and this is what it allowed us to grow our portfolio because once I realized, Brandon, that I didn't have to go to the property and actually fix the toilet and actually be the one having paint all over my jeans, I realized, oh man, I can go to higher leverage tasks and try to go find these deals and then outsource some of the maintenance and the management and all this stuff to people that's what they did for their business. So the team was huge because I didn't want to be the real estate investor who was doing everything himself. I felt like I didn't need to buy myself another job. I was really trying to pursue freedom. And we did reach freedom at a certain level, right? But then, that freedom gets swallowed up in your lifestyle and you're like, I want more. And it's kind of like its own game within itself. But I can say this straight out, like real estate has been the most impactful investment that I could find out there because of the tangibility of it. So the team building, learning how to analyze deals and all that, that was like what kind of started the growth for our journey.
Wow. And so you were buying up these smaller properties, these duplexes, triplexes, quadplexes. What was like, take me back to the moment where you really started to scale it. Like, was there a particular moment where you realized or you could see the ship taking off where you've scaled it from a few units to the 90 some odd units you have right now?
Yeah, I remember it pretty specifically because I just ran out of my own money always. It's like you just have your cash poor and your asset rich, and that's what a lot of times real estate investing does for the mom and pop until you can realize those gains in appreciation, and it takes years. So if anyone's looking to get rich quick, go find something else. That's what I always tell people because it's not going to happen in real estate, but it's like a get rich definitely type thing, just in the future. So once I started to run out of my own money, our podcast started to take off because I was just telling people that. I was like, yeah, we have 10, 12 units. Like, it's great. It's been awesome. I've been able to refi this and sell this and do that, but I'm trying to buy more. And we met a gentleman, his name is Sean, on our podcast, who was a co-sponsor on like 400 units. He'd raised capital. He'd built a portfolio of his own. And he goes, guys, you have people that want to learn what you're doing and also are interested in potentially investing with you and you don't even know it because you have proof that you were able to risk your own money. And that was what was like, oh, wait, we've risked our own money. We've lost our own money. We've made money, but I was willing to risk that. And people started to say, hey, I kind of have a no like and trust with these guys. And he's like, why don't we partner and buy deals together? I can go find these deals. I can manage the construction of it. You guys can help me manage the property management. We can take them down together and pool funds from, friends, family, investors, people that know us. And that was how we started to scale. He's like, our first deal after that was a 7 unit. And then we bought an 18 unit, a 10 unit, and another 7 and another 8. And we found our like lane with this small to mid-sized multifamily because it was above the mom and pop. People weren't really like, going to get conventional loans for this, but it was underneath that institutional, like 50 plus units. And I felt like it was an underserved market. And our partner lives within 15 minutes of all these properties. So that was like the aha moment. Okay, yes, I can continue to do what I'm doing, but it's going to take me forever. Why don't we own 30 or 40% of a larger project and be able to accelerate this faster? And we'll be
Mhm.
thankful that we did kind of years down the line.
How does the cash flow with that? Because in my experience, people, I see uh, people that think, oh my gosh, this person has a 1,000 unit portfolio. Like, oh my gosh, they must be making so much money and so much cash flow. And I think the dirty little secret nobody knows is there's no cash flow coming off those things because it's going to the limited partners, right?
That
They're
is
getting their preferred return. And then you really make your money as a general partner when you sell the asset. And so there's not a whole lot of cash flow that really spits off there. How were you structuring these deals with your investor partners?
That's a great question. And I always like to be upfront and as candid as possible. It's like when we started buying these properties, we really ramped it up in 2023. 2023, we bought like 20 to 30 units. We bought none in 2024. We couldn't pencil out the right deal. And we bought three more properties in 2025. So what I realize is that you're right. The cash flow is very minimal on a lot of these in the beginning. And, we're getting acquisition fees, which is good. That's some active income to go find these properties. But we're not getting a ton of the cash flow until like that 36-month mark is really when the cash flow starts to work in your favor and GPs start to get paid. So we are at a 70-30 split, and the LPs own 70% of the deal. The GPs own 30% of the deal. So I'm part of the GP team. And that's why I say to people, yes, we do own 90 plus units, but I don't own them all myself. The reason we were able to scale is the power of building
Yeah.
that team. So the cash flow on that is, you're right, a lot of it's getting paid back to the limited partners, and they're always what we hold first and foremost, and we keep the responsibility to pay them back. And our upside as general partners is, yes, we do get cash flow after the 70-30 split, but then we're really getting paid on some of the acquisition, more so on the refi and the sale of some of these properties. So I'm still in the stages of building this up to the point where it's sustainable and we're seeing a refi, 2 to 3 refis a year. But I've found, like having an active income, which I'm a real estate agent, and being in that sphere has been very important to me. Like people want this financial freedom. You're going to go sit and live on a beach. And like if you have 25 paid off rental properties, you can do it for sure. But how long does it take you to get to that stage? Probably shorter than it takes you to work 45 years for somebody else, but
Yeah.
still
Yeah.
it's going to take you a significant amount of time. So my goal now is the couple rental properties that I still have where I'm like 50% leveraged on them, which is a good position to be, 6 or 7 years into that. I have a few staples that I'm going to keep, either pay off or re-leverage again. But then our general partnership is, yeah, you got to pay back LPs. And then the cash flow and the big exits come for the GPs later. And I think that's a misconception with a lot of people that share the unit count. I think the unit count's BS anyway, but like for us, it's to let people know that we were able to grow beyond
Mhm.
the onesies and twosies.
I love what you just said there. I'd never heard it put that way. You've got two options, right? When it comes to, financial freedom and independence, the path that's kind of taught is, hey, go work for somebody and max out your 401k and your Roth IRA and your self-directed and yada yada. And go work for someone for 40 years, save and invest your money, and then one day you can build up a nest egg big enough to invest and have cash flow to kind of retire and pay your income. And you just compared it. Well, how long does it take to build a real estate portfolio that can replace your income? Probably not 45 years working for somebody else. Dude, I love that.
I appreciate you saying that because what I'm thinking, if Brandon, if you take 10 years, because I'm in year 7 of this, and I say this to people all the time, year 6 or 7 right now is now when the fruits are actually starting to bear. Like I didn't see them for a long time. Now the cash flow is really starting to roll in a little bit, but you'd be shocked at the cash flow number on the amount of units that we have because it's properties we bought a couple years ago and they take time. But year 6 or year 7 of that, which will be 2030, 2031, that's when it really starts to churn. And I think if you take 10 years, I'm in the middle of this. I'm at 75% in. 10 years of like going hard and investing in real estate, I think you can replace your income. And I say in air quotes retire, but you're the goalpost kind of just keeps moving along the way when people do that. But just as a quick story, and this just happened like this week, so it's fresh. And I didn't know if I was going to share this, but I have a mentor of mine who is very wealthy. He sadly passed away this past week. He's 72, and he worked his whole life and he built this business and he reached, I guess you could call it financial freedom, where he had a bunch of money, but he was kind of still trying to figure out like exiting at this stage. And he died when he was 72, and I don't think that's young, but I realized like you could work your whole life and you could do that, all of that, and be done, a question, in quotes, when you're 68, and then only have 4 years. And then it's like, oh my God, like I just did all of this. So I think the pursuit as early as you can, because we're all just a number, as early as you can get in there and try to get after it. I think doing it in untraditional fashion, you never know when things could happen. You never know when your number is going to be called. And it's like, I watched this guy build something big, but he didn't get to really enjoy it because
Why?
in his,
What do you mean by he didn't get to enjoy it? What should he have done differently?
well, I shouldn't say he didn't, I wasn't with him every day. I shouldn't say he didn't get to enjoy it, but I guess what I'm saying is like he got to the pinnacle of retirement when you're in your late 60s, and he finally got to shut his brain down a little bit of like, oh man, I have the money. I have the money that I've worked all these years to save up. And then 4 years later, he passes away. And it's like, man, is
Mm.
that not a story of like trying to get ahead of this game and not just investing in your 401k and not just investing in your IRA and figuring out alternative ways for you to get to that so that you can really enjoy your 30s and 40s? I'm 34. Like, am I doing every single thing that I want to do right now at 34 years old? No. I have a great baseline and I've reached some level of financial freedom, but I get to do what I want with my time, and I think that time is really important. I drive a paid off car. Like I've moved my expenses to a level that's like I'm really comfortable and I can have optionality. But I think if you can do that in your 30s and 40s and try to get ahead of it and not just wait for these glory days of retirement, I think that's when you can really live. And I don't want to grow just to grow. I want to be able to enjoy it along the way, and a lot of thoughts there. But that's kind of my take on this and why I invest in real estate.
I love it. I really love it. Yeah, it's about lifestyle design. Yeah, and because I think that's where a lot of people get caught up is they think, oh, I'll do the thing now that I've always wanted to do once I have the money, and they just put off to tomorrow what they can actually do today. And I've done presentations on just like the art of fulfillment and stuff like that, and it turns out that you don't need a whole lot of money to do the things. Because when I ask a crowded room, raise your hand, hey, what do you guys want to do if you win the lottery? And it's usually the same answers. It's spend more time with my family and kids, uh, do more with charity, whether donating or getting involved, and do some kind of like dream vacation or trip. Like those are the big three. And I've designed my life in a similar way for those that know me, where I do a lot of traveling. I got a 1 year old now, so not quite as much for a little while, but like I do an annual trip with my mom. She's a history teacher. She's retired now, so we go somewhere historic. I did an annual trip with my dad. He's a big bourbon guy, so it's always some kind of bourbon theme or crypto theme. He's a big crypto guy. I do
Yeah.
a annual sibling trip with my brother and sister. We just got back from Yosemite in the fall to somewhere that's on their bucket list. And so it's like, don't wait to put off what you want to do, thinking, oh, I'll just wait till I get, some magic number in my bank account. Cause you might wake up and 3 decades are gone and you haven't done it.
Yeah, it's called I call it like the false summit type thing where, and this has happened to me a number of times. When I get here, I will be happy. When I get to this position, I will be fulfilled. And that day actually Has never come. I truly, when I was like, oh, when I hit $1 million net worth, then I'll go buy the thing. And that nothing changed on that day. Zero. Nothing changed. And I was like, wow, there's not a party here. Like there's no party when I get to this stage. Like it didn't happen for me. And that made me realize, I'm pretty happy right now. And I'm not saying that so that people don't, the pursuit of goals is like the pursuit, that's what life's about, is the pursuit of things. But if you stop along the way and realize how far you've come and compare you to previous you and not compare you to all the other people out there on the internet, I think you can create happiness while you're doing it. And that's a big challenge. It's been a big challenge for me. It's watching what other people are doing on social media and why don't I have that car? Why don't I have that house? And real estate to me has allowed me to I just like to talk about the optionality it's given me to slow down and speed up, but also slow down in a way to realize like, okay, things are good. Lifestyle design. How do I want my life to look? And I think people lose that when they just work a job or they just think there's only one option or one way to live a life. And there's, as you know, there's a million ways. So yeah.
We're coming up on the end, but I want to ask you. So you've got the Wealth Juice, inner circle where you teach and coach people to get their first investment property, or scale from there if they might have a handful. How does that work? Like, what does your program look like, and how do you help people do that?
What I realized, Brandon, is that the biggest bottleneck for people isn't necessarily in the weeds of what to do. It's the confidence to overcome the
Yeah.
fear to actually do it. So, what we do is we teach people how to get started because I know how much that first deal changed my life. And I said it to you like, wow, going from $1,000 a month in rent to living for free. Oh my God, it opened up my eyes. I realized this real estate game is powerful. So, what we do is we diagnose each individual situation, help you get that first deal in 3 to 6 months. We set you up with the team. We set you up with the deal analysis. We show you how to do it, but also give you the accountability and the confidence that you can go do it yourself. And I think most people will sit on the sidelines for years and think real estate's for the rich or real estate's for somebody else. And it's not. I didn't grow up wealthy. I grew up middle class. And me and my partner have figured out a way that if we can empower other people to do this, the wealth gap is just widening and widening and widening, and it's not going to get easier. It's going to get more difficult. So if we can empower people to go do this and figure out a way to just buy a few properties. My goal was one property a year for 10 years when I started because I figured that would help me have some optionality. And it grew faster than that. But the community aspect allows you to get around other people who are thinking big, who want to pursue real estate. And we give you a blueprint on how to do that. And we meet every single week to help you get there.
Sweet. I love it. And Cory, if people want to learn more about learn more about the Wealth Juice podcast or learn more about the Wealth Juice Inner Circle, where can they go?
The best place to find us, it depends what you like, long form or short form content, is Instagram. We're at Wealth Juice Official. And we post every day. Whether it's motivation, whether it's specific deal analysis or showing you how to underwrite deals. I throw some humor in there too on just like some trends. That's a great place to start. And then the Wealth Juice podcast, we post 2 episodes every single week. We interview successful entrepreneurs and investors, diving into strategies of how they've done what they've done to live life on their own terms. And you're coming on our podcast in a couple weeks, so I'm really excited about that. But those are the best places for people to get in touch with us. And then juice-enterprises.com if you want to learn more about the inner circle specifically.
Awesome, man. I love it. Go check out Cory's stuff, guys. And if you got value from this episode, show Cory some love, show me some love, share this episode with somebody, like it, comment on it, and we will see you guys next time. Cory, thanks for coming on.
Thanks, Brandon. I appreciate it.